I want to welcome you to this webinar on agriculture and climate risk hosted by the UNEP Finance Initiative, the Principles for Sustainable Insurance, and the Impact Insurance Facility of the ILO. This webinar is part of a series of webinars that are jointly organized as part of the global agenda for ensuring sustainable development. And today's session is going to be around agriculture and climate risks. I am Miguel Solana. I am the host of this webinar. I am a senior technical officer at the Impact Insurance Facility, and I will be guiding you through this webinar today. First of all, I would like to clarify a couple of the interface with the webinar system. I mean, you must be able to see a similar window in your screen. You can hide and unhide the control panel clicking on the horizontal arrow. We will be having polls, 2 polls during this webinar, so you will be able to participate with your opinion on certain things, and you can ask the staff questions that we will be collecting, and later at the end of the webinar we will hold a Q&A session where these questions, the most relevant ones and the most interesting ones, will be selected to be answered by our panelists. So if there is any particular questions, you can use the chat window, and we hope to be able to help you also with any issues that will be coming throughout the webinar. So I want to introduce our panelists today. First of all, we will have Dr. Samson Ajibola, who is a doctor of veterinary medicine from the Usmanu Dafondillo University in Sokoto, and he has been a practicing farmer for over 15 years. He's the head of agriculture microinsurance with Leadway Insurance Company in Nigeria. Samson and his team are presently working on area yield crop index insurance on maize, rice, and soya beans in the northern parts of Nigeria. So I welcome Dr. Samson to the webinar. Then we will have Marcel Stäheli, who is an executive manager and senior parametric product manager in CelsiusPro AG in Switzerland. He's responsible for introducing parametric, tropical, cyclone, and earthquake products. Before March 2007, he was a director and head agro, weather, and energy underwriting within environmental commodity markets at Swiss Re, and he's worked for over 10 years in the worldwide weather and energy markets. And then, last but not least, we will have Manoj Yadav, who is a project advisor for RIICE, the Remote Sensing-Based Information and Insurance for Crops in Emerging Economies project at GIZ in New Delhi. Manoj has worked with several leading financial institutions and state governments in the area of financial inclusion with a special emphasis on microinsurance and agriculture insurance. Prior to his current assignment, he worked as assistant vice president in a micro pension advisory firm implementing the government of India's national pension system. Manoj holds a master's degree in rural management from the Xavier Institute of Management in Bhubaneswar. So I want to welcome our panelists today. And I'm going to just have a quick introduction to the subject and why are we talking today about sort of agricultural and climate risks. According to the World Economic Forum, the 2006 Global Risk Report, what we see that is the greatest risk facing the world in the coming 10 years is the failure of climate change mitigation adaptation. This raises, I believe, a huge question to the insurance industry on how will the insurance industry provide solutions around climate risks and how climate risk will become more relevant to be able to tackle with different fronts. I want to then talk about the Sustainable Development Goals and why do we believe that climate risk is important in the context of the Sustainable Development Goals. I picked a couple of goals that I believe touch directly climate change. For me, the first one's around no poverty. I think the general population of the world is being significantly vulnerable to climate risks, and this means that without the right solutions to tackle climate risk, we will be able to see backward steps into the fight against poverty. Then when we are talking about zero hunger, I mean, we believe that food security is at risk with loss in productivity and income by farmers. That could certainly affect the future of the the population in terms of hunger. Around the third sustainable development goal, we have something around health, good health and well-being. We see that new patterns in climate is also triggering new pandemics and new illnesses that were not prepared for particular populations. So being able to adapt to this kind of climate patterns will also mean that the health agenda will be shaped by how climate change will be hitting different geographies. Then when we talk about gender equality, we can see that we need to improve the access to everyone in terms of the solutions and the capacity to use products to manage risk. And it's not only about sort of a one-sided solution, but it's about a gender mainstream solution that takes into account the needs from the different genders. When we talk about decent work and economic growth, we talk about the importance of the protective mechanism of insurance and how it can foster growth and productive investments. When we talk on the SDG number 9 about industry innovation infrastructure, I believe it is important to think about the access to technology and how we need to build infrastructure that will help us to better manage the risks in the future, both in terms of resilience and adaptation. And I think number 10 is also extremely important, reduced inequalities, when we're thinking that climate change is increasing the inequality in the world, and that if we want to fight the increasing inequality gap that we are observing, it will be extremely important to be able to manage risk better so that populations can remain in an unequal world. So I believe this provides us enough background to think around, like, why is it important to be talking about insurance, risk management, and climate risks. We're going to start the session with a quick poll. And this poll has one question for everyone, and it is, what is the biggest challenge for the insurance industry to develop solutions for agricultural and climate risks? Answer number 1 would be data availability and changing patterns of events, meaning that also even data may not be so relevant today given new events happening. Number 2 is understanding of insurance integrated to other adaptation strategies, meaning that insurance on its own is not the only solution to facing climate change shocks. I mean, there's other adaptation strategies that need to be integrated with insurance so that there's a long-lasting effect on climate change adaptation. Point number 3 is deliver mechanisms to reach out to the population, meaning that we can have the best products, but if we are not able to find the mechanisms to reach out to vulnerable populations to insure them, we won't be able to succeed in creating sustainable products. So we're going to launch the poll. You can answer. We have around 20 seconds, and then I will share the results with you. So please answer your questions, either data availability, number 1, understanding of integrated and other adaptation strategies, number 2, and number 3 is the deliver mechanisms to reach out to the population. Maybe we can close the poll. The results. And I think it's very interesting to see that the audience identifies delivery mechanisms to reach out to the population as the greatest challenge for the industry. It is important to see that we need to find out the ways to reach out to people and create the right partnerships for that. And I think the coming examples will be a wonderful sort of menu of experiences that have been working on the field trying to provide solutions. So we can start with our first panelist, with Dr. Samson Ajibola. He's joining us, Ajibola. He's joining us from the phone line, and he has a flight to catch to Abuja a little bit later during the call, so he will be dropping before. So let's welcome Samson to talk from Leadway, Nigeria, to talk to us about his experience on risks associated with agribusiness and investments. Samson?
Yeah, thank you. Thank you very much. My name is Samson Ajibola, as introduced. Okay, I'll be talking on a few slides, especially on a risk associated with agribusiness and investment as identified in Nigeria context. Okay, I've discovered that when people think of agricultural risk, the first thing we think of is production risk. You know, production risk directly related to the climate, the weather, pests, disease, technology, all things around production that affect it. I also try to categorize this production risk into three folds: into the natural, which is directly related to the climate that we are discussing. Then we also have a social and political risk that are directly influencing the productivity of the animal. Like here in Nigeria, bush burning is a culture. Okay, it's a culture that people try to catch some rat and whatever, and it affects many plants and many farmers during the dry season. Also economic and financial or market, category, price fluctuation as an input and output has been a major challenge around here in Nigeria. Depreciation, loss of income, interest rate change, exchange rate, particularly to Nigeria context, is a very big challenge to farmers, trying to produce in Nigeria. Another major risk that faces farmers in Nigeria is the issue of financial risk. Okay, cost and availability of capital. The federal government in Nigeria tries to subsidize the capital or the cost of capital in Nigeria, and still you find out that the farmer are paying more than single digits of as interest rates. Meeting up the cash flow in the course of the season. I cannot talk about this without linking it to human risk. The farmer has his family to feed, he has his children to send to school, he has to take care of maternity bill, hospital bill, and at the same time, he needs to continuously maintain his crop or his animal during the production phase. So meeting up the cash flow in timely manner is another major challenge. So cash flow is very, very important. It's a big risk. Whatever model, financial model that anyone is designing to help farmers around the world, we should always put this into consideration. That most time when farmers are in the planting phase, they don't have anything to sell and they don't have any source of income. Their source of income is always waiting for the harvest time. So making cash flow is very, very important to the farmer. And of course, their ability to absorb short-term financial shock, okay, is also a major challenge. Another major challenge that farmers face here around in this country is the issue related to market risk. Availability to market is a major risk here too. How would they transform what they have produced into financial success? So it has seriously created, and what I see people doing around now is that, I'm a typical farmer myself. I will ask you, give me the capital, provide me with the market, and I will produce for you. So what we are trying to do is to link farmers to off-takers. In fact, we are using off-takers now as aggregator for our insurance product. That is the value position we are assuming. We take off-takers to farmers and say, okay, you are producing rice. Yes, we have this off-taker. It's going to mop up all your production at the end of the season at an agreed price with a plus or minus 10 to 15 price elasticity. And at the end of the season, you discover that the farmer are cooperating very well with this off-taker. They are happy doing business with them. Another risk that farmers face, which is very, very important, which many people doesn't consider, like I've mentioned before, is human risk. So human are both source of business risk and an important part of the strategy for dealing with it. At the core of this is that people who are involved in the business, are they safe? Are they satisfied? Are they productive? You will see that one of the major challenge of insurance globally is moral hazard. So if you don't keep the people who are working in the business safe, satisfied, and productive, then they are going to be serving as a sabotage, to the success of the farmer. So we also need to consider this. So while we are trying to manage risk of farmer, we should also look into, their human resource model. How are they, paying their farmer? What is the model they are using? Is it in conformity with what other people who are working in other sector, getting, so that they can get best out of this worker who are working for them, not serve as a moral risk to their business. So another thing in human risk, is the issue of health and well-being. Farmers, both the farmer's family, his labor, his laborer, and the people who are working around him. We need to also look at their health. For example, you go to many rural communities, there is not even primary health care center. It's common malaria. It is the end of the season for that farmer at the end for that year. The family and business relationship. Farmer needs to be educated financially, how to manage business and how to manage family. Most farmers, their business is their family is their business. And financial literacy is very important, saving culture, how to when you get loan from bank or from government, how to maintain it so that you will be able to pay back. So all this we need to pass through the farmer, and is directly related to the human, perspective of the farmer and what they face. Like any other business as well, legal risk is also a very important challenge to the farmers around here. Because of the land tenure system, you discover that many farmers will go and acquire land, and then before they will build something tangible on it, they have to displace them and relocate them. So the contractual arrangement of land acquisition, is very, very important. Of course, if the land is not there, there's nothing the farmer wants to farm on. And then maybe this is not totally related to crop farmers, maybe to livestock farmers and poultry farmers, poultry and aquaculture, farmers in particularly. The issue of public policy and attitude, environmental pollution, the poultry farm becoming a nuisance to the society. And most time in Nigeria, you discover that there is a poultry farmer that is the first person to reach a new site. There is the one who made the road there, who brought light to that place, is the one who sunk the borehole there, and other neighbors are now coming to build their residential building around him. And at the end of the day, they are going to send him packing because of the smell, the ammonia discharge from his poultry outfit. So this is also a very big risk. So how to manage this is very, very important to the farmer. Then I won't sell this all in this 5 risks. We should appreciate as a underwriters or as stakeholders that insurance cannot provide all the solutions. So we need to integrate all the stakeholders. So we need financial experts to understand the agricultural business and to be able to partner with the farmer to structure good, financial model, capital model for them. So we need lawyers who can help them, we need policies of government, so we need the actuaries, we need risk surveyor, we need even primary health care people in the medical line. So all work together to help the farmer in the area of and maybe one thing that I omitted in the slide I sent to you is how are the farmers around this place? How are they coping with risk? I've noticed that maybe in the last 1 year, about 5,800,000 farmers in Nigeria experienced a form of loss or the other. And about 3 million of them, according to the survey, didn't do anything about it. They don't know what to do. They don't have any means of surviving. They just left to fate. About 1 million, they spent their savings. About the 500,000 have to sell their assets. And you discover that only a reduced number of just less than 30,000 people actually had insurance. That is very, very ridiculous. So some of them have to reduce their expenses. About 400 farmers, said they have to reduce their expenses. So these are issues around the farmer. Then what solution am I, strategizing to, or what our strategy to look at this problem? Also, just first as a business, one, to help the farmer and to integrate them to deepen the penetration, financial penetration, and also to better their economy. Now, if you look at the agricultural insurance history in Nigeria, can be traced back to 1987 when the federal government started Nigeria Agricultural Insurance Scheme. And later in 1993, they mandated Nigeria, they incorporated a company, a public company called Nigeria Agricultural Insurance Corporation, to manage this scheme. But we'll find out that the federal government find out that this scheme is not performing to its capacity, and in order to fix the financial value chain for agriculture and to bring Nigeria back to its position, in terms of agriculture being the agricultural produce being the major export commodity. So there was a survey that was found out, and it was discovered that only few farmers, enjoy insurance from NIIC, and that bankers don't want to lend to farmers because they don't trust the risk management system, and for the fact that only one company is carrying all the farmers' risk. So that was why they said that, okay, private insurance companies should come in, and that is why people like us are coming into the business, so people who can do business on contractual and commercial basis, and who can bring back the confidence and to guarantee. So how am I doing this? Farmers doesn't trust insurance on the status quo. They don't want to relate with insurance. So what I'm trying to do now is to package, insurance into the inputs the farmer like. That's one. Two, I'm training the agro dealers whom the farmer have trusted over the year, to become insurance agents. Through them, they will be the ones selling insurance and reaching out to the farmer. So that is what we are doing presently. And apart from that, we are also trying to develop, micro insurance products that are related to health, and that can even take care of the little property that the farmer has, the farmer has in his village or in his hamlet. So we are trying to consider the small holder farmer, and that is why we are working on area index insurance for crop, particularly maize, rice, and soya beans at the moment, so that we will be able to reach out to the smallholder farmers. Because in the Nigerian context, we discovered that there is a smallholder farmer that actually feeds the nation. So, and the existing insurance model in Nigeria indirectly exclude them because those products, like the multi-peril crop insurance, is too expensive to administer to this smallholder farmer who has maybe between just 1 and 5 hectares of land. So we are trying to look at what will reach the farmer's target of production and what will reach into his family and also his little property that he has in his village. And that is the reason why my portfolio and my office is termed agriculture and micro insurance. So like I've said, another thing we are trying to do is to develop an adequate risk management mechanism, professional advisory service. Late last year, early this year, there was outbreak of avian influenza in Nigeria, and immediately I looked into my client base, and as a veterinary doctor, I can help the poultry farmer. So I did, and I provided a form of short notes, some form of a small outlet for them, okay, just for them to prevent the outbreak of bird flu on their farm. So these are some of the things that we are doing and that we are working on, in the Nigeria context. And maybe finally, as my parting shot to round up everything, I'm looking forward to a risk management mechanism around, Africa and particularly the whole world that will integrate all the stakeholders so that you see the underwriter working together with, health sector working together with, the other people, stakeholder in the financial institution in order to make sure that we better the lot of farmer and cushion the effects of climate change. Thank you.
Thank you very much, Dr. Ajibola. I find extremely interesting how you put us in context of not only thinking about productivity risks, but having to understand all the other risks that farmers are facing, starting with their families, then market prices, political and legal, and how actually adaptation and productivity practices do depend from how well we manage to adapt to all risks and not only one single risk. I know that you will have to leave a little bit early the webinar, but we will collect the questions, and I invite everybody from the audience to post questions on the chat box that in this case we will be then forwarding to Mr. Ajibola for answering them. Okay, so thank you very much. I would like to thank you, and I would like to introduce now to Marcel Stäheli from CelsiusPro to talk to us about our Kenyan experience.
Yes, hello everybody. So it's a pleasure for me to be here and actually to be the middleman here of giving some thoughts about what can be done in this area of agriculture and climate risk. My presentation, I have structured it in two parts. The first part I would like to show you on a clip where actually you have to put on the link which is being provided to you a short introduction how agricultural risk can be managed with insurance product. In the second part, I would like to give you an overview of such a product has been implemented and applied in one of a larger insurance scheme in Africa. So, Miguel, you have to help me out here. I think it's right that everybody has to click on the YouTube link and watch that clip. That is last about 3 minutes, and I hope that everybody already starts watching it, and I will pause here for a moment and let it run, and then I'm gonna jump into the second part.
So everybody got the link on the chat box. So if people can please click on that, and we have 3 minutes to watch the video, please.
So I guess that everybody had a chance to look at this clip. I think that is so. So then I would like to continue. So this clip actually very nicely showed how such weather products are being available, in particular to, well, farmers who obviously have access to those products. But obviously there are also areas on this planet where unfortunately not everybody has the luxury and the access to those products. So you would have to think then more of a micro way, on a micro scheme, where a government, for instance, gonna think about implementing such products for their communities. And now the next few slides, I would like to give you an example how such a macro program is going to look like, where CelsiusPro was mandated to set up a web-based tool to extract and access the data, or the NDVI data here in particular, which are needed to design this product. So NDVI, just everybody knows that, stands for Normalized Difference Vegetation Index, which is an index being measured by a satellite by NASA, where pictures are being shot on a 10-day interval and obviously being available publicly, but you're going to take those values which going to indicate the so to speak, the greenness of the grass, or as the index says, the vegetation on ground by 250 meters by 250 meters. So this data is available, and this data is also available at CelsiusPro database. And we, as a service company in the weather or the parametric industries, have designed, or actually they are designed, a web tool for those who are gonna sell at the end of the day these products. So who is actually the inventor, so to speak, of this scheme? So the Kenyan government, or in this particular case the Ministry of Agriculture, Livestock and Fishery, had a plan, and obviously, or has the goal, or still has the goal, had the goal and still has the goal, to implement a nationwide livestock insurance scheme covering farmers against livestock losses caused by severe drought. The CLIP program, as it stands in short, has developed with the support of World Bank and the International Livestock Research Institute, as well as with public and private sector stakeholders. So there obviously us, for instance, who has been providing the necessary support, but obviously you also need the risk takers, who at the end of the day are going to assume the risk, which are being picked up by that program, so such as insurer and reinsurers. As said in the beginning, this is a micro-level insurance scheme protecting actually the farmers against their livestocks. What is being measured is actually, as I said in the beginning, it's the vegetation, which can be actually then translated into the forage. So if there is not enough feed for the animals, they actually will die. And the index is defined to capture, or actually to approximate, that vegetation, and if the vegetation due to shortfall in rain is gonna fall below a certain threshold, then the product or the index will trigger and the payout will be made directly to the farmers. This program covers 5 tropical livestock units. So these are actually 5 cows for each family or for each farmer. The premium is being is being borne by the government. If, for instance, people would like to insure more than just those 5 animals, they can do that. There is a program available which is called IBLI, or Index-Based Livestock Insurance, but the premium would need to be paid by the farmer itself. And as said, if there is going to be a payout, then the loss settlement will be provided by CelsiusPro. Losses will be determined by CelsiusPro and obviously being settled through the system, which then actually triggers then the automatic loss payments directly to the farmers. If you can go to the next slide, please. Before going into the details of the program and how this program is being administrated, I would like to give you a short overview of the Kenya and the agriculture industry as such. So you're going to see on the map the red and the yellow colored areas. So these are, I would say, the most exposed areas where this insurance protection obviously has a desire to be implemented. So you have like in the red the arid and the yellow the semi-arid districts where you expect to see from time to time certain droughts. So the government of Kenya has actually defined 14 target counties. You're going to see there are a lot of numbers where you can see how much animals are actually being in those 14 targeted counties and how much they account for the entire country. So with that in mind, the government started or launched the first program in October 2015, starting with 2 counties, and each county has a number of, they are called here insurance units. So in total there were 26 insurance units. Then this program is being designed such that it covers the short and the long rainy seasons. As you can see, so the short rainy season goes from October to February. There's going to be an index calculation and obviously also a settlement after that risk period, where then just the long rainy season is going to follow from March to September. And in the first year, so the first year means both seasons, the short and long rain seasons, there were 5,012 farmers being covered. After this first year, it was a success, and obviously the government wanted to expand the program further. What they actually did with effective 1st of October 2016. So they expanded from 2 counties to 6 counties, covering now 70 insurance units. As you might have seen and heard or experienced, even for those who are actually listening in here and living close by, that there has been a severe drought during the short rain season, October to February 2016 and 17. And just to give you here some flavor how this program actually has responded to that drought. So there were actually 88% or 62 of those 70 insurance units got triggered. So overall, many farmers had received a payment covering actually over 50,000 animals under this extended program. So in total, there were 12,064 farmers covered in the second phase, and obviously there is the goal to further expand the program to, as I mentioned before, to the 14 target counties. If you can go to the next slide, please. We're going to see here the first 2 counties under which the program started in October 2015. So CelsiusPro is the calculation agent under the CLIP program, of course also on the voluntary program, which I mentioned before, which covers those farmers in excess of 5 units or cows. These were the two counties, as I said, and covered or expanded to 4, and the goal is obviously to expand as many counties as possible. So please, next slide. So CelsiusPro has actually downloaded all the data in its database, but obviously it's not only NDVI data we have all sorts of data, ground weather station, grid data around the globe. But for this program, the NDVI was defined and designed to use that to best approximate the drought risk of those farmers. So with the tool we have designed and obviously also provided to the insurance companies or the government using our services, you can actually select the covered area. Like in this example, this is for the county Turkana, which was one of the first 2 counties, where you can actually then with our environmental monitoring system, as it is called, to visualize the past conditions or those past years for those rainy seasons. So you're gonna see the different colors which indicate, as we have seen before. Could you quickly switch back to the previous slide? Yes, thank you. On the bottom right, you're going to see there the scale of the meaning of the different colors. And just for your information, this program is going to start pay when the color is gonna get into black. So then that is actually indicates that it has been severely drought, and the index is somewhere between 0 and 20% or 0.2. The next slide, please. What the system also does, it shows the past NDVI indices as it has been measured and reported by the data provider. On the top right, you can see how the NDVI has been developing. You can actually scale or expand, the time window you would like to review the index. At the bottom, you see a functionality which is going to show you the deviation from the normal. So basically, that data set is available since 2001, and for that given season and period, you're gonna look at, like in this example, you can see how the NDVI has been evolving for any given season in the past. So if you're just going to look at maybe the first season, which is the gray shaded bar, the one on the left-hand side, you're going to see that the index has started off right at 0, so so to speak, at normal condition. Then over the months of this season, the index dropped slightly to 0.5, and then around in the middle of the season there has been enough rainfall again, so the vegetation has been doing good, and the index obviously has been going back to normal. And in this case, the index would have settled right at the climatology, so to speak. And as you have seen before, it needs to be a severe drought, or actually it needs to be a severe deviation below that yellow line that the program would actually be making a payout. So these are the functionalities of this service we're going to provide under this scheme. Now, if you're going to go to the last slide, you're going to see then obviously if there is, well, we're going to report actually after each and every season. We're going to create a payout report for all those counties and insurance units, which are going to be presented in the way as you're going to see it on the right-hand side, where you can see the deviation of the normal. For instance, in the first column, you're going to see minus 0.85, which then corresponds to a percentile of 0.21 under the index. So all of those index values wouldn't have triggered, in this example, wouldn't have triggered a loss under that given year. But of course, as I mentioned before, the past short rain season was extremely dry, or the index extremely low, and under that report you would have seen a lot of black colored numbers, which would have actually triggered then the loss payment automatically. So this gives you a little bit of an insight how a macro insurance program can be administered by a platform making available by CelsiusPro. And as the poll said, that obviously finding the right distribution partners or distribution channel is always a challenge. But once that's found, there are obviously solutions around which can make the life for sales and administration of the program pretty easy by, for instance, just using something like what CelsiusPro has been doing under the CLIP program for the Kenyan government. So with that, I'm at the end of my quick presentation about this. We can do whatever the time tells us. We can either do right away some Q&A, or we're just going to move them to the end and do it there.
Thank you, Marcel, very much. We're running a little bit tight on time, so we will have to move all the questions to the end and see how many questions we can accommodate. So this allows me to introduce Manoj Yadav from RIICE to talk to us a little bit about this experience in India. Manoj.
Thanks, Miguel, and thank you for the opportunity. Greetings to all the listeners of this webinar. My name is Manoj Yadav. I work with GIZ, and I will be talking about the RIICE project, which we have been implementing in several countries, and I'll be specifically focusing on the example from India, the state of Tamil Nadu. Before we start the presentation, let me give you some background information about the project. The project was conceived in early 2012 with SDC funding, with the objective to ensure food security, especially using remote sensing technology as an instrument, and achieving across Southeast Asia and Southeast Asian countries. With that, let me also talk about the partners in the project. We have SARMAP, which is a Switzerland-based firm that specializes in remote sensing technology. We have International RIICE Research Institute, which helped develop the yield modeling for paddy crop. And then we have GIZ, which is managing the project in several countries, including other countries like Thailand and India. And we have Allianz Re as one of the insurance partners. In terms of national partners, we have the Tamil Nadu Agricultural University, which is our local in-country implementation partner. And we have the Agriculture Insurance Company of India, which has been our long-standing partner in developing the crop insurance solutions. Let me start with some background about the overall crop insurance scheme, because the project aims to help deliver the mandate of crop insurance within the crop insurance framework. In early 2016, a scheme called the Pradhan Mantri Fasal Bima Yojana, which loosely translates to the Prime Minister's crop insurance scheme, was launched, and the scheme envisaged the role of technology, especially remote sensing technology, towards achieving the objectives of the scheme. With that scheme in focus, we will talk about certain scheme elements which we are facilitating and helping the governments implement that scheme in an efficient manner. Next slide, please. So what we have here is three key elements. The first one is the remote sensing data, which we acquire every 12 days. And we have in the past used several sensors, European satellites, especially German and Italian. And now we have also had experience with the Indian RIICE satellite with the spatial resolution ranging from 12 meters to 20 meters to 50 meters. We substantiate the findings based on the ground truthing that we conduct, and we also calculate the accuracy and the reliability of the results that we generate. There are certain scheme features like prevented sowing cover, which in Marcel's video he talked about dry sowing period. So that is where prevented sowing comes into picture. And if there is a mid-season adversity while the crop is in the field, there is a provision for early payouts using on-account payment cover. And then towards the end, the scheme being an area yield index insurance scheme, we have traditional methods of loss assessment, which is the crop cutting experiments, how this technology can help rationalize the number of crop cutting experiments and further reduce the time it takes to go for the claim settlement. Next slide, please. So what we have is the satellite data that we acquire is processed to generate RIICE area maps, and we do this by using high resolution synthetic aperture radar data, which is different from the optical data because it has several advantages. For example, it is free from cloud, which is when the main cropping season is during monsoon, for example, in case of paddy crop. And then we combine that with the crop yield model, or RIICE in this case, and then using smartphone we validate the results and as well as collect data from the ground. And once all this is generated, there is a provision to process this on a cloud-based platform for speedy processing. Moving on, the next slide. So if you ask what are the key question that we answer, I mean, in fact, in one of the options in the poll that was conducted earlier, one of the key questions was how relevant is data. So data is the key when it comes to crop insurance, and no other production system is exposed to the fluctuation in weather and the corresponding impact on the yield, and therefore it is very essential to capture that how it translates to the fluctuation in the area under cultivation as well as the yield that is expected from that particular area. Now, the current scheme which is being implemented, it operates at village level. What it means is that one insurance unit is one village, and the cumulative yield loss of one village will lead to indemnification of the farmers within the entire village. And therefore, it is essential that we have accurate information about how much is area under a particular crop in a particular village, and as the season progresses, what happens to that portfolio in terms of its crop health and in terms of the effect on the yield. So the key question that we try to answer is in front of you. How much was the area that was planted in a corresponding season at various administrative levels, starting from village upwards? And what is the corresponding yield in those areas where rice is being grown? what was the production compared to the historical data, and how delayed has been the sowing period and the corresponding harvest period. And then the most important question, which is the element of disaster risk management as well. How much is the impact of severe climatic events like flood or drought? Moving on. If you have to visualize the product that we generate, on the left side you see it's the map of a particular block in Tiruvarur district in the state of Tamil Nadu. This is the block level map, and you can see where paddy has been grown in a particular season. On the right side, we go further into a particular block, and we see a village level map, and we can clearly see what is the status in terms of how much area in a particular village is being covered under rice crop. So this is particularly important, and I will talk about during the next slides how this translates to delivering the mandate of crop insurance in the new crop insurance scheme. Moving on. So this is the example from last 2 cropping seasons in a particular village in Tamil Nadu, and the current season, which is this season, has witnessed severe drought in the state, and the entire state has been declared as drought hit, the effect of which can be clearly seen compared to the previous cropping season. You see the exact same village has seen a contraction in the rice area. And it has severe implications for the farmers, for the insurance companies, of course, and from the payouts point of view. And I will talk about how it will translate to payouts in the coming slide. The particular scheme feature is called prevented sowing cover, where if the farmers are prevented or if they have transplanted, if there is a loss of germination and the corresponding loss of area is more than 75%, then the whole village, all the farmers in the village are eligible for 25% of the sum insured. So what we are looking at, if in this village, if the area, total area in the green color on the left side, and the corresponding green area on the right side, if you take a ratio, if that is less than 25%, then we have payouts happening in this particular village. So what this technology does is it helps in identifying the eligibility of the farmers in terms of payouts. This particular method is far more easier as compared to the traditional methods, where the data is collected via the agriculture officers, and then they collate and then they generate the data, share it with the respective insurance companies, which takes an inordinate amount of time. And of course, needless to say, it is fraught with the subjectivity which creeps in, and of course the moral hazard and so on and so forth. Moving on. So this is one slide which captures, I mean, out of several products, this is also one of the products, and you can see with every satellite pass date, which is every 12 days, you can see the progress of the transplantation, or whatever the method is, either direct seeding or transplantation. The progress of the sowing, you can see clearly how much rice area was added with each and every satellite pass date within the cropping season. So you can see the major sowing happened towards October 19th and 31st October. And then we have late rice as well in several areas. Moving on. This is the most important feature of the project in terms of the output. What you're seeing in front of you is the same village which we saw in previous slides for rice area. This is the corresponding yield map of that particular village, and you can see the yields range from 513 kg per hectare, tons per hectare, to 4,362 kg per hectare. And this particular map indicates several challenges in the implementation of crop insurance scheme. One is the basis risk. you see the traditional crop cutting experiment based loss assessment entails that there should be 4 crop cutting experiments in this particular village. And when you take the average value, it might not indicate the reality depending on where those 4 CCs locations are. For example, if all the 4 CCs take place in the green area, then the average yield of the village goes up, and we will have a scenario where the farmers in the red and yellow area will miss the payout. And as a village, the whole village will miss the payout. The idea is here to accurately assess the yield at village level, and not just at village level, but also guide the crop cutting experiments as a step towards use of remote sensing based yield in payouts. I will also talk about that, but please picture this particular slide, which has the yield values for respective pixel spread across the whole village, ranging from 513 to 4,362 kg per hectare. Moving on. Miguel, if you can please click and give the full slide. I think the animation is not working properly. Okay, great. So what you see here is an overview of crop insurance scheme in India and the corresponding scheme features. So the first row has the crop growth stage, which is divided into 3 phases: pre-vegetative phase, vegetative and reproduction phase, and then the maturity phase. And then we have the crop insurance scheme and its features that apply to a particular vegetative phase. For example, in the pre-vegetative phase, we have prevented or failed sowing, where the farmers are compensated in case they are prevented from sowing due to adverse climatic conditions, like we saw in that map. And then during the vegetative and reproduction phase, if there is mid-season adversity, then the farmers can be compensated ahead of the final yield assessment. And then we have the traditional method of loss assessment, which is the crop cutting experiments during the maturity phase or the harvest phase. And you see in the last row, this is what we are supporting the governments with. In case of prevented and failed sowing, with our products, we can precisely generate the start of season maps and early rice area maps, which will identify the areas where the prevented or failed sowing have been observed. And also we can, using our yield modeling technology, we can forecast the yield which can be expected towards the end of the season, and therefore farmers can be compensated during the season instead of waiting for the season to unfold and then the CCs are done. In the last phase, as I talked about in that village level yield map, the sampling of CCs can be guided using this technology, which we are currently working on, and we'll be recommending to the government shortly about how the CCs can be guided. Because from the crop insurance point of view, if the whole village is imagine it to be green, then there is really no case for crop insurance in those particular areas. So why conduct CCs in those areas where there is no possibility, or there is very low possibility or low risk of losses? And how efficiently we can mobilize limited manpower for conducting CCs towards areas which are high risk, which have more red area that we saw in the last slide, and how efficiently we can conduct the CCs in those areas. So once all these elements are together, are put in perspective, are implemented efficiently, then we will have a scheme that operates or functions very well at a village level, which primarily is the objective of the scheme. Moving on. Let me talk about the disaster risk management element of the project. And it's interesting because in 2015, the month of November, I'm sure many of you would be aware of the inundation in the city of Chennai, the capital of Tamil Nadu. While the city was witnessing a disaster, the similar disaster was unfolding in the neighboring districts, especially in the rice growing region where farmers were getting affected. What we did is that we, using our technology, we calculated how much area was inundated, for what duration, and the corresponding losses which the farmers have had incurred during that duration. And the government acted using this information, and they mobilized relief measures to the tune of 50 tons of short duration paddy seeds were distributed to farmers in a particular district so that they can recover and salvage their crop. Incidentally, the current season, the year immediately after this disaster, the state is witnessing the worst disaster in the last 140 years. So imagine the state facing severe drought, and the next corresponding year you see a scenario where there is severe drought in the last 140 years. It's an unbelievable situation out there. As a result, so what it signifies that the severity is increasing, but at the same time the frequency, I don't know if this is a trend, but if this continues, it will be catastrophic for the insurance, crop insurance in general. What we aim to do is we aim to capture the losses as they are, and help the governments and the insurance companies monitor their portfolio and come up with the real or accurate estimation of corresponding yield losses. Moving on. So to summarize my presentation, this slide will talk about the key area of improvement in the current crop insurance scheme, and for that let me go back to what Dr. Samson Ajibola talked about. He said that not all the crop insurance not the answer to all the problems facing agriculture. Similarly, technology is not the solution to all the problems facing agriculture, but it can, to a fairly large extent, help facilitate and smoothen whatever the existing system is. And these are the points which do that. The first one is the in-season crop area monitoring and yield estimation that I've already talked about. Then determination and progress of area sown, which has implications for payouts as well. The continuous monitoring of crop health. No other production system in the world is exposed to weather as much as agriculture insurance or agriculture production in general, and therefore the need for continuous monitoring cannot be emphasized any further. The efficient identification of homogeneous or stressed areas is important, from reducing the basis risk, which is inherent in practically all the crop insurance schemes. And then the last slide that we focused on, how efficiently and how fast we can map the losses which happen due to disaster. Then the prevented sowing cover and on-account payment, the typical crop insurance, Indian crop insurance scheme features which can be triggered or activated or implemented using this technology. And the last part is the crop cutting experiments, because crop cutting experiments as a method of loss assessment for this scheme are not going to go away. However, we can improve the process by rationalizing the number of crop cutting experiments required and prioritize or target areas where they should be done first in terms of capturing the loss assessment and reducing the turnaround time for payouts. Moving on. So what we have achieved in last couple of years in terms of, can you please go for the whole slide in one go, so that, yeah, thank you. So what we have done in the last couple of years is, once the technology matured to the extent that we were satisfied with consistent, positive and accurate results, the results were then presented to the state government of Tamil Nadu for adoption in their respective crop insurance scheme which they are implementing. As a result, the government, upon satisfaction, recommended the project to be piloted in the 2016 season. The technology was also mentioned in the tender process, which was carried out to select the insurance companies as one of the preconditions for their selection. What it means is that they had to refer to this data in case of the insurance payouts or in case of any other need. Then the project was also approved by the state level committee on crop insurance for a statewide pilot. And in the last season, we indeed used the technology to come up with results. We shared that with the Department of Agriculture, which they are considering for payouts in the current season. Incidentally, last month the committee also approved to extend the pilot further for this year, and this is a mark of the success of the project in the state of Tamil Nadu. What has happened subsequently is that other state governments have come forward and they have adopted this, and these two state governments are the government of Odisha and the government of Andhra Pradesh. There are a couple of other state governments which are also actively evaluating the technology, and in the coming years we will see almost a majority of the rice growing areas, states in this country will be using this technology. And let me go to the last slide, or the final slide, to summarize the overall experience. See, we have several products which solve certain problems, which I have described in detail, and some of them are key to this success. For example, the rapid loss assessment in case of disaster, the mid-season, start of the season estimation of losses, and the availability of data at village level, which is where which is the holy grail of crop insurance currently. What it will lead to is timely and scientific, transparent and efficient process, and finally a technology which delivers on crop insurance, which has been a long felt demand in this country. However, all said and done, there are certain challenges which still need to be overcome, and some of them are like how to operationalize the scheme features, because the government of India has described the scheme. However, the implementation lies with the state government, so they have to be creative in terms of operationalizing them. How to operationalize scheme features like prevented sowing or mid-season adversity, like on-account payment. How to go for smart CC sampling. So and most of all, the availability of cadastral data, the village level boundary maps, which have to be accurate so that the results can be captured accurately. So there are challenges. However, we are positive that we will overcome in due course of time and do a good job in improving the efficiency of this existing crop insurance scheme in India. With that, I would like to close my presentation. Next slide, please, and thank you so much for your time. Thank you.
Thank you, Manoj. Just as a quick transition, we want to run a quick poll. I mean, we can see that both CelsiusPro and RIICE have been talking about technology. So we quickly want to hear on how can technology best leverage for insurance. So we've seen a lot around number one, data and information gathering. Number two, reaching out to clients and improving the experience of insurance. And number three, improve processes to reduce costs. So I let the audience 20 seconds to complete the poll. And we can close the poll now. And we see in this case around how technology can be leveraged around data and information gathering. And I think this comes to us a little bit in contrast to the main challenge around distribution, and now seeing that we can better use technology for data and information gathering. So if we want to wrap up a little bit on the things that the industry should be working on, is around the distribution side of things, and then leveraging better technology on data and information gathering. With this, we can move to a very short Q&A. Dr. Ajibola had to move on, so we will be forwarding all the questions that we got for him. We got a significant amount on questions on this Nigerian case, so that will be coming. And then I will have one question for Marcel and one question for Manoj, as we're very short in time. So the question to Marcel in this case, on the CelsiusPro, and it reads the following way. This is a very interesting approach to mitigating losses incurred through droughts, but isn't it better to mitigate losses before they occur? I mean to say, if you see a drought occurring or better establishing over time, isn't there a way for the data owners to warn the farmers and direct them to areas where the drought isn't occurring or is likely to be less severe? then they are able to preserve their assets, animals, instead of replacing them after they have died from the drought. I guess that's even better for the insurance company. So Marcel, do you have any opinions about this, how to use information for prevention?
Yes, thanks for this question. Actually, an excellent question. And I would say that if you are not dealing with the mother of nature, if you're going to deal about engineering and buildings and casualty and all this kind of mechanical stuff, absolutely, for the insurance and reinsurance, you know, prevention is absolutely an important part or items to be involved, and obviously, you know, make those losses or prevent those losses and hopefully avoid them in the best case. But if you're dealing with the mother nature, then obviously, which is chaotic in nature, it's extremely difficult. Of course, there are models out there from you know, the large meteorological institution who are going to provide, you know, whatever short-term, mid-term, long-range forecasts. And of course, the short-term forecasts are usually those which have the highest forecast skills. So the next day, the next few days. But as soon as you're gonna, you know, looking further out, or the lead time is gonna go further out, then obviously that skill is gonna go away. You can say, okay, ENSO is a very important signal, and all those countries which are ENSO prone, yes, you can actually predict to a certain extent whether it's going to be wet or dry or cold or warm in a given upcoming season. But to predict that far out, in particular if you're going to put yourself into the farmer's shoe, who has obviously in this case, in the Kenyan case, who would actually have to start walking into or moving to another area, they would have, you know, moved several hundred kilometers, maybe already at the condition where it has been beginning of dry. You can most probably not really force those people to do so based on the forecast, which has most probably not that much of skills. So if you're going to start moving the people, or going to alert the people start moving around, you're going to have here, you know, you can actually create here not only good but also bad, you know, to certain people and families. But to make a long story short, of course, it would be great if you could actually warn the people well ahead, but obviously this is all subject to, you know, how good are those models and how confident you're going to be whether those models going to predict those droughts, upcoming droughts, accurately or not. And maybe one final comment: if those models would be 100% accurate, then I think we wouldn't be attending this webinar, because then you would actually have other problems to solve than this one. I don't know whether this answers your question, but that's the best I can actually try to explain here. But more than happy to give a more comprehensive view and opinion for that participant. Can obviously always reach out to me.
Perfect. We will do that. And then we're running out of time, so I will have to run to the next question for Manoj, which is a very straightforward question. Does the RIICE contribute to the reduction of commercial premium costs?
The short answer is directly no, but indirectly it is possible. Why it does not contribute to direct reduction in commercial premium cost is because so far the data has not been considered for area factor, for example. So when the premium is being calculated, if the RIICE area from this technology is used, probably it's going to come down, because we have seen instances where the area reported is higher than what it should be. So in that case, we will reduce the discrepancy and we will have a realistic estimate of the area under cultivation, the acreage, and therefore there is a possibility in future.
Thank you, Manoj. So I'm sorry the question and answers had to be so short. but we're running out of time. We'll be forwarding all the questions to all single participants so that they can help answering these questions. And then I will just move towards the end of the webinar, sort of what for me would be the way forward. And I think following Dr. Ajibola's suggestion is around like, it is important to understand all the household risk dimensions that climate change is triggering. We can see that there's other dimensions like market prices, legal considerations, political unrest, that we need to start providing solutions in terms of climate change. Is not only about the productivity question, it's about families too that take decisions actually not only around the amount of money they will make, but about their day-to-day needs. I think many of the questions that we got to the audience take us to the next point, which is around the integration to adaptation mechanisms for insurance to be sustainable. How can we prevent losses before insurance companies have to pay for them? Certainly there will be more events, stronger events, and therefore adaptation practices will be essential in the delivery of insurance to the population. So I think both projects are looking at it in terms of information. I mean, there's also around closer practices. So I think that is missing from this webinar. So it's something that we leave for the future. And I think all these examples showed us a couple of things, which is the last point, which is about we can use technology for a diversity of things. The one that the audience thinks the most about is around data collection. But we should be also thinking about delivery and how to use technology to reduce the costs. And this also means that all this kind of programs that will be dealing with insurance for climate risk will need partnerships among a diversity of stakeholders, from climatic agencies, technology providers, risk carriers, insurance companies, distribution partners, etc. This means that these are not straightforward solutions, but these are solutions that involve a variety of partners. So with these three conclusions, I want to close the webinar. Just as a quick wrap up, there will be two coming webinars, one on the continuation of a first health webinar, and the second one will be on insurance regulations that will be announced in the future. So I want to thank you for your time, for your patience that we're running a little bit late. But hopefully this was interesting, and we hope to be hearing you in the future. Thank you very much.